This is Financially Fit Business with Ruth King.
Welcome to the Financially Fit Business Podcast. Here you discover ideas, tactics, news, and information that matters to the health of your business or your clients' businesses. I'm your host, Ruth King. Here's how we will help you increase the financial fitness of your businesses today. There are 7 parts of a financially fit business. Number 1 is tracking, billable hours or billable units of revenue, cash and financial statements. Number 2 is overhead cost per revenue unit and net profit per revenue unit. 3 is pricing. 4 is recurring revenue. 5 is monthly metrics. 6 is budgeting. 7 is monthly financial statement review. Over the next several podcasts, I will go through the details for each one of these parts of a financially fit business. Let's start with number 1, what a business needs to track. The interesting thing is that without tracking, no one knows how the business is doing. I mean, we track through financial statements every month, and if it's just simply getting a bunch of numbers at the end of the month, that probably doesn't help a business owner, because most business owners really and truly don't get the numbers. They like to see, graphs, and it's better for them to see the picture rather than necessarily the numbers, and you can all help them with that. We want to track also, as we discussed in the very, very first podcast, how the company actually generates revenue or revenue per unit. So if the revenue per unit is billable hours, then, how many billable hours were there? And were they profitable billable hours? If it was how many meals were served and were those meals profitable? In a bar, for example, it's how many drinks, and what's the profitability of each drink? We can go on and on and on, but I think you'll start looking at different things and different ways and going into stores and looking at how things actually are generating revenue as a result of producing a particular product or a particular service. So it's, break it down and track whatever the metric is. So if the metric is meals in a restaurant, then you want to track the number of meals, per day. Are there more meals served on weekends? Probably. But what's the difference between Monday and, let's say, Friday night? Probably it's pretty dramatic. And then you can look at the profitability of Monday versus the profitability of Wednesday night. In an accounting practice, you're going to track the number of profitable billable hours. And it's not only how many hours can they bill, it's how many hours can they bill profitably. And that's really the bottom line. Or when we get to number 4, which is recurring revenue, you may want to switch to a model that looks at recurring revenue. So the first thing, obviously, to track is how you generate revenue, or how your business generates revenue, or how your client's business generates revenues. And the first time you have a talk with a business owner about, how do you generate revenue, their response is probably going to be like yours was in the beginning. Sales. Yeah, it is sales. But let's go a little bit deeper. Let's look at it from a perspective of, okay, how do we generate those sales? Well, we produce this product, or we produce this product, or we have this service. It's interesting when you start breaking these down by products. If a business has a different product mix with different gross margins, with different amounts of time it takes to produce those products or those services, you're in a situation where you're going to be able sometimes to look at it and say, okay, this product is very profitable for you. This product or this service is not very profitable for you. Is it a good business decision to continue making, producing, providing this particular product or service that is not profitable for you? So it's an interesting discussion with businesses that have multiple products, multiple types of products. So you want to make sure that every single type of product is actually generating, obviously, revenue, number 1, but also making sure that it's profitable revenue. The other thing that you have to take into consideration is seasonality. And a lot of businesses are very seasonal. The most seasonal business I have ever seen is in a building that is just outside of Wichita, Kansas. And I was working with a client, and we were driving from the airport to his business. And he said, "You see that building over there?" And I said, "Yeah." And he goes, "That's open 6 weeks out of the year." I said, "Oh, yeah?" He said, "It's a fireworks store. And in 6 weeks, they produce enough revenue to carry them, the owners, through the entire year." So that is, no revenue, no revenue, no revenue, 6 weeks revenue and down. So their financial statements look a little weird compared to almost everybody else's, where we do produce revenues throughout the year, some more in months than other months. But it's an example of a company who basically is busy maybe 2 months out of the year, starting it up and shutting it down for an extra 2 weeks or so. But the reality is there are many, many different ways to generate revenue, and some of it may be seasonal and some of it may not. But you have to track whatever that seasonality is, if it's seasonal, and you also have to track whatever that revenue per unit of product or unit of service actually is, and make sure that all of it is profitable. So that's the first thing that you always want to track. And when we get back from break, we'll talk about cash and obviously financial statements as the two other major things that we want to track at all times. Thanks for listening to the Financially Fit Business Podcast. We'll be right back.
Financial advisory services are the key to the longevity of the accounting profession. If you want to get started providing advisory services or want a review of a finance course you took in college, Ruth King's manual, Understanding Financial Trends Analysis, might be your first step. This manual gives you the information you need to help your clients with their financial statements. A great start or addition to your financial advisory practice. You help them with clarity on their business's financial health, the ability to spot impending issues and resolve them before they become a major crisis, less stress and sleepless nights worrying about the financial part of their business. Your Financial Statement Trends Analysis Manual is the reference guide. What do you want in your financial advisory services practice? Click on the link below for more information and to order.
We're back. Thanks for listening to the Financially Fit Business Podcast. Before the break, we were talking about tracking revenue-producing hours. And I said I'd talk about cash and financial statements in this segment. And some of you are probably wondering, well, why didn't you talk about cash first? Because I want you to get the issue about revenue. Because without producing revenue, you don't have cash. Unless you have a very rich uncle who will fund a business, whether it's making money or not. But I think if your uncle is very rich, he'd want to make sure that the business is profitable and producing revenues and cash before they invest in a particular business. So, billable hours, if you're a service provider, contractor, home services provider, accountant, those types of things, or revenue per meal, or revenue per member, or revenue for a car who goes through a car wash. Those are incredibly important things to track every week. Now, let's talk about cash, because that revenue has to produce cash. And cash, in my book, is king, queen, and everything else in between. Because without cash, you can't run a business. I mean, yeah, the rich uncle might be out there, but the rich uncle's only going to invest so much. The reality is you have to have profitable revenue to be able to turn it into cash, to be able to fund the entire business. And I look at cash almost every day. Not almost every day, every day. So what I suggest that you do, and you have your clients do, if you're an accountant or a bookkeeper listening to this, is to look at your bank statements online every single day. And it takes 5 minutes. It's like waking up in the morning and brushing your teeth. Wake up in the morning, brush your teeth, then go look at your bank statements online. And here's why. Many years ago, I worked with a company, and the owner didn't want to look at his bank statements online, so we let the bookkeeper, and made it the bookkeeper's responsibility to look at the bank statements online every single day. And so the bookkeeper did it every single day. And one day he saw those two little deposits, like the 16 cents and the 79 cents, and he thought, oh, the owner's just, starting, a new whatever, and he just forgot to tell me that he's got a new account that he's opening. He didn't think about it, didn't think to ask about it, nothing. So the next day, the bank calls and said, "Did you authorize two $25,000 withdrawals?" No. So what was going on with those two little, deposits was making sure that the bank account was real. And so it was, a bad guy somewhere, and they were just doing random numbers, checking accounts for routing numbers, and finding a business that actually had the deposits. And as a result, they knew the next day they could pull money out of there. So always, 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 always look at bank statements every single day. And this is why I look at it. Now, you can also see, obviously, ACH withdrawals and checks that bounce and all the other fun things that go on with your account. But if you see something suspicious, it is much better for you to call the bank and say, "Close my account," as painful as that would have been, than to lose $50,000 had the bank not called. All right. So that's why I always say, look at and track your cash every single day. It should become like brushing your teeth every single day. Cash is critical. Without cash, you can't, as we all know, you can't really operate a business. And the third thing always to track is financial statements. And everything else, and we'll talk about metrics when we get to part 5, but these are the 3 biggies. These are the 3 overall things that you're going to do. And if you're a bookkeeper and you're producing the financial statements for your clients, or you're a business owner and you have an internal bookkeeper producing the financial statements, you have to look at them. You can do them in graphical form, which is a whole lot easier to understand, but you have to look at them every single month. There's no excuses anymore. Many business owners literally look at the bottom line. They don't get the numbers. They throw it in the drawer and say, okay, we made a profit or we didn't make a profit this particular month. So it's really a situation where, the financial statements and you as bookkeepers and you as CPAs can do a really good financial analysis and financial review with your clients, looking at what their financial statements are actually telling them. And those of you who have internal bookkeepers, guess what? You get to do it yourself. But actually, spend the time, spend the half hour reviewing the financial statements to make sure that they're heading in the right direction. And if they're not, over the course of this podcast, we'll talk about what to do if, overhead's not going the right way where it should be going, or productivity or profitability. We'll get into all those things in future podcasts. I don't want to do it in this podcast. I want to give you the 7 parts of financially fit businesses. So track your revenue producing units absolutely first, and make sure that those revenue producing units are profitable. Look at seasonality, look at product mix. Okay. The next thing we want to make sure that we track every day is cash. Want to make sure that you look at your bank statements every single day. If you are signing checks, look at what you sign. Another funny story about that one. I was sitting with a client and he's signing payroll checks and he starts laughing. And I'm like, we're not talking about something funny. And he turns around a payroll check to me and he goes, this was an extra $10,000 that the bookkeeper made a mistake with. And can you imagine if that employee had gotten that extra $10,000? Thanks, boss. And spent it. And then you'd have to go through it. But, watch what you sign if you are signing checks. And then make sure that you look at financial statements once a month to see where the company is trending and whether the company is trending in a healthy way or not. Okay. So next time when we get together, we're going to talk about overhead cost per revenue unit and net profit per revenue unit. And we'll continue through the 7 parts of a financially fit business over the next several podcasts. So thank you for joining us. Choose one thing you discovered and implement it in your business. These ideas, tactics, and strategies help you make more money, have more free time, and give back. If you like today's program, spread the word. Please review this podcast on any device you're listening to it on. Help a business owner improve the health of his company. For comments or questions, call me at 770-729-8000 or email rking@financiallyfit.business. Thanks for listening. Have a great and profitable day.